So we could get some very dramatic moves in this currency pair. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So 52 week low, we are 0.8% away from it, but we are minus 14% away from the 52 week highs. And you see that compared to other currency pairs, that is definitively on the higher end of the spectrum. We have an average here of 11, but you have a few pairs that have these monster moves. So let's jump into the charts. So the tickers are EUR/AED. The thing is that I do see time cycles, but the duration of the time cycles have differed over time. But I think it's pretty clear that there are time cycles. Beyond the time cycles, we have an extremely important horizontal support level in play at the moment. So let's draw that in. It is okay. That's a bit big. So like that. So it is here, support back here, here, and even back here. So this is a multi-decade support level. It's a big deal. The primary assumption would be that the bulls are going to try to use this as an opportunity. But if the bulls are not able to do that, and this becomes a fail level, then we will see a significant downside. Looking at the daily data points, we have seen a very protracted downtrend. We see that there is this mirroring effect here, where you see that this move is mirrored by this one. This cluster here is mirrored over, in this territory. You see that this cluster is a bit similar to this, and this move here is a bit similar-ish to this. So it's obviously not going to be a perfect mirror, but there's something here that's interesting that suggests that maybe there could be some bulls jumping in to form, at least attempt to form some lows. Or that bears are going to close out some of their positions. If you look here at the weeklies, we are at the very low end of this range on the RSI and also the PPOs. The problem for the bulls is that going back here to 2014 and 2010, you do see that we were significantly lower on the RSI and the PPOs. Yeah, also here on the daily data points as well. We are low, but we are not at these extreme buy lows. So in terms of going into the laboratory here and drawing some conclusions, I do think that for horizontal support, it is pretty clear. This is a very important level, and this is a multi-decade support level. So going very far back in time across very different contexts, it is a fact that this level has a tendency to attract bulls. That also, however, means that if a multi-decade support level were to fail, then the ramifications could be dramatic. But I do think I will give the bulls the benefit of the doubt here. So let me give them a 2. Here we have the seasonality to the right for the currency pair. We do see that in red over the last 10 years, and in blue over the last 7, and green over the last 5, there is a tendency for the euro to outperform towards late May. But there's a big but. After that, we usually see strong underperformance from the euro. looking here to the left, this is the Euro index. And over the last 20 years, we do see that May is the weakest month. Given that the current month, big picture, is the weakest for the Euro, it sort of neutralizes the potential bullishness that we usually see in the pair Euro United Arab Emirates Dirham. So I do think that overall I will give this one to the bears. I give them a -4. When it comes to the fundamentals, one of the very troubling things for the Euro at the moment is definitely the major conflict with Russia, which Europe is very deeply into at very high costs short term, but especially also long term. We have seen a huge spike in the price of various energies and other natural resources. So Europe is really, boycotting Russia without having really something to replace it with. So it's a huge stake game. So I do think that this entire context is very much Euro bearish. United Arab Emirates, they do have their own issues, but nothing close to what we have in Europe. So definitively, when it comes to the fundamentals, then I will have to give this one to the dirham. So I give a -3. So here we have some correlations. We have 40% positive with the S&P 500. We have 46% with gold, long-term, weekly data points, and -36 with the 10-year yield. Then we have -18% with the UAE ETF, which represents the stock market in the United Arab Emirates. If we go to the daily data points, which represents more the short-term correlations, then we have 53% with the S&P 500, -70 with gold, and -85% with the 10-year yield. And then all of a sudden we have a whopping -90% with UAE ETF. So let's look at what is happening with the UAE ETF. UAE, like that. It's from the iShares MSCI. Yeah, so here we have the weekly data points, and we have seen a huge recovery for this ETF, from the plunge lows. Definitively a V-shaped recovery. We do have a breakout, which is of course bullish, but we have seen a very substantial move from the lows. So from the low here, we have seen 118%. But if you waited to buy the breakout, then instead you would have 3.46%. So that those two numbers are very, very different. So if we zoom in a bit here, we are pulling back a bit here, finding support at the green 50-day moving average. The problem with the 50-day is that you see here that price has a noisy relationship with that moving average. It's more tradable if it's clean, but when you recently have had noise, it means that sure, it is still relevant, but it doesn't have the same legitimacy that it would have if it was like squeaky clean, either like clean resistance or clean support. Something that I do see that is a bit squeaky clean at the moment, that is the relationship between price and this purple 20-day moving average. Very clean support back there, but recently it's been a solid level here for the bears. I mean, just almost looks like, printing money. So yeah, definitively working out. So yeah, I think the 20-day moving average here is a lot more interesting to trade than the 50-day, even though sure, the 50-day usually matters more. Okay. Looking here at MACD and RSI and the PPOs, we are at extremely high levels, notwithstanding the recent pullbacks. On the dailies, we do see some cool down, but yeah. We could look at the relationship between the currency pair and the UAE stock market, but I think it's a bit better to maybe look at the classics like gold and the dollar and Bitcoin, because they are more in like the same territory. Okay, so this is the relationship between the currency pair euro/AED against gold, and we do see here the downtrend, which means that Euro AED has weakened systematically against gold, so it's been better to be invested in gold. Yeah, we see new lows here as well, lower highs and lower lows, so that is the definition of a downtrend. If we go here to the daily data points, yeah. And we do see some recent higher lows here, and these two are, higher highs, but this is way too early to celebrate. So let's see what the seasonality data suggests. It says that it's a bit messy because you do see that towards early June, we usually see underperformance, but then we see outperformance after that. So it makes more sense to turn bullish on the euro in this pair towards early June. Here we have the currency pair against the dollar index, and something you can see here is we have a major support level in play at the moment. Big boy support, critical back here. Vis-a-vis this low, we actually have lost it. Also vis-a-vis this low here. So it is a rather vulnerable horizontal support level for sure. Looking here at the RSI, we are at lows that have formed key lows in the past, but not like in a clean way. A bit messy. Let's go to the daily data points and look at the seasonality. So over the last 10 years in red, 7 years in blue, and 5 years in green, we do see that the euro in this pair tends to weaken against the dollar index towards mid-August. Here we have the relationship between the pair and Bitcoin. Yeah. So if we zoom in a bit here, there is some sideways action. So that's interesting. So we've gone from massive underperformance to now consolidation. Interesting. So let's look a bit here at the seasonality. Yeah, so we only get data for the last 5 years here, which suggests, that seasonally we tend to see underperformance. I think that overall I will give this one to the bears. But I give the bears just a -1. So we end up with a score here of -1.5, which is more favorable to bearish than bullish positions. So even though we do have horizontal support at the moment, the other data suggests that there is an increased probability that the support will fail. One of the troubling news today which definitively affect the fundamentals, is that Russia is very worried about Poland. And if you know your European history, when Poland gets involved in wars or rumors of wars, it usually is pretty bad news. Yeah, there are some troubling times for Europe. So it's quite something to think about. Think about all the immigrants who have fled to Europe, but they have literally fled to the continent that is the mother of the previous two world wars. So if you are worried about wars, you are in some war zone, then I would suggest reading up on European history, because this is not some utopia of peace. If you go further back in time, looking at the Middle Ages and the Renaissance. I mean, there were many wars. Okay, and the thing that prevents most wars is actually economic interdependence. So that is definitively something to think about. And it makes perfect sense. If my wealth was 50% invested in NATO countries, and then the other 50% was in non-NATO countries, then I would be financially very incentivized to promote peace. But if it wasn't the case, I didn't have that dependence on other regions, then the attitude would be very different. So yeah, incentives, they do certainly work. Whatever you do, of course, you want to use stops, be market neutral, and promote, economic interdependence wherever you go.